but let's be clear. Walmart stock still up nearly 30% in the past year. So how much, if at all, do we read into this? Joining us now, Simeon Gutman. He is retail analyst at Morgan Stanley. Simeon, was it the earnings or was it the guidance? Was it tariffs or something else?
Thanks for having me, Brian. It was the earnings. We didn't get the level of profit growth that you would expect given the level of sales growth. And I think the prior guest said it well. There isn't a lot of room for disappointment, high responsibility, high expectations. And Walmart has coached the market that they can deliver both sales growth and profit in the same quarter. This time we call profit growth or flow through was a little bit underwhelming, under expectations. There is a story beneath the story, which we should talk about, but the headline number wasn't as good as it could have been.
Well, what is the story beneath the story then?
So they're dealing with insurance claims. This is something that a lot of companies are dealing with, higher liability claims, predominantly grocers too. A lot of employees, the inflation that we've seen, this is almost post-COVID inflation, the magnitude of the incidents, that's been a true up. That's something they're accruing. If you look at the U.S. business, which is their flagship division, their biggest division by sales and by profit, the underlying profit growth or EBIT growth, the way we look at it, was actually quite healthy. It was up 8% if you exclude the liability. I'm not arguing you should exclude it. It's part of the ongoing part of the business, but it's a little bit of a catch up. So if you're looking at the underlying level of profit, 8% in the U.S. growth on top of 4.6% comp, that's a pretty healthy outlook. That's a pretty healthy outcome, but big multiple, you have to take your lumps when they occur, and this wasn't pristine.
Is insurance claim, is that theft?
No, this is worker liability. This could be accidents. This could be other injuries that stem. And that's
worker disability claims, hurt back, slipped and fell, whatever it might be.
Yeah, it's cost of doing business, and it seems to be going up for a lot of retailers.
So it's interesting you mentioned that, because if you're talking about it, Simeon, it means it's material enough for you to mention. How material of a problem is this for Walmart and maybe others?
Well, we're talking 2% U.S. EBIT growth would have been closer to 8% just for this quarter. If you look at it on an enterprise level, we're talking 0.6% that would have been total around 6%. So it's a pretty big number in terms of dollars. The way it works, it's an accrual and it's a catch up. And once you catch up and you're accruing at that rate, it doesn't get you the following year. So in theory, it becomes, we call it a good guy, meaning the comparison the following year. So they should be able to grow faster in subsequent quarters. That's pretty much the narrative.
Okay, so but 2%, not a lot, but it might be that marginal number enough to either say it's a miss or a make. So where does Walmart go from here, and what role ultimately are tariffs going to play at Walmart?
So initially tariff, and that's the other part of the story, the U.S. gross margin was up about 20, 25 basis points in the second quarter. It had been running almost double that. So if you think about tariffs, Walmart seems to be absorbing more of it themselves than the market was expecting. The numbers are pretty clear. So that's the role. And I think Walmart is forward investing in a way, leaning into price to drive more value at a time when the customer needs it most. And I think that's another piece of the story, which, Brian, should drive faster future growth for them. So you ask where Walmart is going. The structural story, which is faster sales growth, faster profit growth, that should be intact. This quarter was a disappointment, a temporal disappointment. If you look at this period overall of faster growth, Walmart hasn't delivered that profit growth perfectly every quarter, but in totality they have. So structurally, the big getting bigger, Walmart growing faster, share gains continue.
Oh, okay, and briefly, we talked about Target a lot yesterday for many, many obvious reasons. Is Walmart picking up any Target shoppers?
The math is unequivocal. They have to be. Target is declining in sales. Walmart's growing in sales. And we're talking by 600 basis point difference in growth rate. So one is putting dollars back. We call it a share donor. One is taking dollars. The customer overlap is there. It's not perfect, but it's there. So by math and given the size of both of these retailers, the answer is yes.
Like it. Simeon Gutman, really appreciate your views on Walmart. Obviously, critical company and critical index member. Simeon, thank you very much.